Hi, everyone. This is me, Kanika, back again with another interesting episode of the Insights Lounge at Mindcog. We're a market research and Marcom firm. And the agenda of this podcast is to bring to you interesting people, policymakers, change makers, leaders, veterans from the industry, and share their insights with you. Today, we have with us Mr. Sulabh Tandon. Hi, Sulabh.
Hi, Kanika.
Sulabh is the Chief Business Officer at Airpay Payment Services, and he brings about 2 decades of experience in strategy, distribution, financial services. He's worked with some very reputed organizations such as IBM, Airtel, Max Life, Home Credit, and MSwipe. Currently, he's leading the acquisition and distribution at Airpay and works with a lot of D2C and consumer brands almost on a daily basis to help them unlock new revenue through better payment infrastructure. My recent interaction with Sulabh was actually at an event held by D2C Insider Community, where when I first heard him, I thought like I need to talk to this person and have him on our podcast. And he was very gracious to oblige us. So thank you so much for making this time today.
No, thank you, Kanika. Thank you for having me here. And I think it's very important that what we are trying to do gets talked about more and more because we believe it's genuinely helpful for all D2C and consumer brands. So glad to be here.
Lovely. So, Sulabh, I want to start with your story. We just talked about some background of yours. Tell me a little bit more about how one thing led to another. How did you actually end up at Airpay? When you look back at the journey, what do you think it has taught you? And please connect it to your current role at Airpay so we have a better context.
Sure. So started off as an engineer, like almost every kid in that age, right? And I didn't enjoy it so much and thought that it's better that I get into the front of the business rather than on the back of the business. So with that in mind, I did my MBA, and after an MBA, as you mentioned, I got an opportunity to work with very, very large brands like IBM, Max, etc. And I have switched roles. So in my journey, I have had multi-industry experience, and I've been fortunate to have multiple roles experience. Right. So like I started as a pure play strategy consultant, and
Hmm.
now I'm heading the business, right? So I think all of this has kind of contributed in terms of what I bring to the table. I have been fortunate to work with a lot of leaders who have taught me a lot of good things, small but very, very important in our daily life. That is how I would feel that all these journeys have kind of culminated into what I do today and where I've been now for almost 4 years with Airpay. And I think every day is, in that sense, a new learning, right? And what's unique about my journey, I can say, because I've had multi industry experience, I've been able to cross pollinate in that sense, right? So I remember during COVID when a lot of businesses were impacted, right? And the regular business flow was hampered because of the external circumstances, right? I was able to bring in something that I learned in collections while doing business development, right? So all this has really helped me. And while I have worked with large companies, but I've always been starting businesses within those large companies also, right? Like within Home Credit, for example, which is a huge
Hmm.
European conglomerate, we established a business from scratch. So I've done these 0 to 1 journeys, which highlighted a lot of issues, pain points, which I believe that today at Airpay we are trying to solve.
And in your current role at Airpay, you work with a lot of D2C brands. We already are seeing that India's D2C market is in a very strong growth phase. But payments still seem to be treated as like a backend function or like an add-on function, which people, I think, it's more of like an afterthought. Why do you think that happens? And, what do you think it ends up costing them?
So very interesting. I'll put myself in a startup founder's shoes, right, for a minute. What is most important for me? Most important is that my business should survive. Right? I'm in that
Correct.
constant rut. I'm in that constant battle, right? Because I have
Mm.
competition. I have larger players. I maybe have a product market fit which is not complete. I'm kind of a little bit insecure also because I'm doing too many things at the same time. So something which seems as basic as a payments, right?
Mm.
I'm happy because I have thousand other things to do.
Mm.
But guess what? This is the moment of truth. Whatever you have done in your journey, your product might be superlative, your pricing might be very, very nice. You might have found your product market fit also. But
Mm.
if the payment is not smooth,
Mm.
everything else goes for a toss, right?
Mm.
So that is one issue that we are facing as a D2C industry. and
Mm.
which is where Airpay is trying to come in and solve that problem through multiple initiatives, which I'm sure we'll talk about during the course of this discussion. But yeah, that's the overarching theme that payments is not an afterthought. Actually, your business thought process should start with how will I get the money and how will I make it as easy as possible for my customers to make payments to me.
Yeah, yeah. You're absolutely right. I mean, even though I don't come from D2C as a background, but we, as a market research agency, we do work with a lot of consumer brands. And what you said is absolutely right. I think the 0 to 1 journey is probably thought a little bit randomized, also, I would say. But when they start growing beyond that, then they actually start thinking about all of these functions like payment, data, understanding of consumer behavior, things like that in granular level because now they want to scale. And that's when they actually start thinking more objectively and more scientifically.
Absolutely
And you
right.
realize so you're right. I mean, payments is not just, it should not be an afterthought. It's not just an add on function that, oh, somebody will take care of it or it'll happen. You're
Yeah.
right.
I mean, you raise a very interesting point here, right? In terms of the data, right? So again, let's assume I am a startup founder, right? And I'm working my socks off. I got a great product on the shelf and it's flying, right? 1 month down the line, I don't know who's buying my product. And suddenly the sales dip, right? Why?
Mhm.
Because I don't have my payments data. I am dependent on third parties,
Yeah.
which may or may not be sharing what I need, right? Or to the level that I need. That is why the control of the payment process is very important for any D2C founder, right? It's a
Mhm.
part of customer experience, and honestly, it's one of the most critical components of the customer experience. So while we see all these D2C founders and companies focusing on the unboxing event, focusing on the first usage event, focusing on repeat purchases, etc., etc., equally important is, do you know who's buying from you? Do you know why somebody abandoned the purchase midway, right?
Mm.
Or somebody tried and failed, or somebody was so happy that they referred you to their friends. Ownership of data is what comes through direct sales. Yes, quick scale can come through other platforms, third party platforms, but then
Mm.
is it really sustainable? That's the question.
Since we're on this, Sulabh, let's go a little deeper. And I'm sure you've worked with a lot of these founders. Tell me what kind of problems related to payment keep coming up, are commonly faced by D2C founders. What is it that I would even ask that what is it that Airpay has been able to solve vis-a-vis other similar solutions?
So, few things, right? So, one is this whole returns puzzle, right? Now, a lot of founders I speak to, they look at returns as just one outcome, but actually a result of a lot of input, things not going the right way they should, right? For example, Airpay has a solution wherein we already know which PIN codes are kind of blacklisted, which are known for, let's say, high frauds, high returns, high chargebacks, etc., right? So if you can filter those out initially, then you save yourself, right? Similarly, at a customer level, right? If we give options to customers like address prefill. So if let's say you are in the payment journey and you just have to enter your mobile number and all your addresses which are saved with other merchants or on the same merchant platform become visible to you. Your journey becomes much more smoother, right?
Right.
One more thing I can add here is the affordability part. So a lot of customers today are looking at options of EMI, buy now, pay later, etc., in a frictionless way, right? Because let's say they're going for a product which is of 20,000 price, but they actually want to go for something which is 50,000. But because they don't have the paying capacity right now, they end up making a compromise, and then sometimes it can lead to bad customer experience. Rather than that, if you can give your customers EMI and buy now, pay later options there and then they don't have to cough out a entire sum from their pocket, and yet they get the product that they want. And for the merchant, EMI doesn't mean that I will get my payment as the customer makes the payment. No, it's not tied to the customer schedule. You get your payment with Airpay, at least you get your payment on T+1. And we don't charge anything extra for EMI, right? So these are some small things, but if you aggregate them, they create a big difference in terms of where D2C founders sales are and where they can be. Did I make sense?
Yeah. Yeah, I completely see what you're saying, and I am the two things that you talked about. I think they are big levers. So the returns, I know returns is a big one, and second is of course the ability to actually break down into AMI. Of course, is going to ease people into making the purchase that they want to, which means more cash flow for the founder, but not at the cost of delayed payments, not at the cost of like credit being given. Do
Correct.
you also see some problems which you think founders don't initially foresee, like and they sort of don't get talked about, but they comes up later, and that is where the role of using a better payment solution is very important versus just anyone.
Yeah. So I'll break this answer into two parts. Okay. One, what is specific to payments, and one is this whole ecosystem thinking that at least we are trying to bring on board.
Yeah.
So first, on the payment side, you're absolutely right. Founders sometimes don't think about failures in terms of why payments can fail, right? They just look at, okay, this is the amount of business I have done, but they should also look at this is the amount of business I have lost, right? Because a lot of customers will try once or twice, and if they can't make the payment, they will just move away. Or if they can't find
Yeah.
the payment instrument that they are looking for, right? Let's
Correct.
say I bank with a particular, let's say one of the smaller banks in the country, but I want to make payment using my bank, right? Because for me, that is the bank. And now your payment gateway doesn't support that bank for whatever reason, then it's a bad experience for you, and you may choose not to purchase from their website, right? So that's a loss. So one is the success rate, which are multi-PG, which is like Airpay, as I said, which has multiple PGs behind it. So if even if there is one problem with a particular PG, it switches over to the another PG and so on and so forth. So overall success rate is taken care of. The other thing which I said earlier is about the whole set of payment options, right? So because UPI has become so dominant, sometimes D2C founders forget that there are other instruments also which are important to have, right? So while maybe getting UPI, you should be looking at as many payment options as possible because your customer may choose any one of them. So you should be ready. Other than this, then I think something that I have thought of is the whole price versus value game, right? So a lot of time, this is honestly not only true about D2C, this is true about mid-scale and even enterprise merchants. A lot of times they see payments as just a cost and they talk about cost minimization, right?
No.
You have to see the value, right? Like it's as simple as you can buy something at a low cost, but does it deliver the same value, right? So a lot of D2C founders that I have spoken to don't even know which PG they are using properly. To be honest, they struggle to recollect the name. They struggle to recollect the cost, right? Yeah, I have something like XX. Yeah, maybe the cost is bye. I actually don't remember. And when you tell them that, see, if you are doing a sale of, let's say, 10 lakhs per month, right? You could actually save 10,000 rupees and you can use that 10,000 rupees every month on your marketing budget, right? You can have an agency like Mindcog using that 10,000 rupees to drive sales versus making a payment to a payment gateway, which is going to provide you the same service. And you have to understand the value that is being brought in, right? Last thing I would say on this side is the whole support part, right? So a lot of payment gateways or a lot of payment companies offer a lot in terms of promises, but in terms of delivery, especially when it comes to service, they do not really focus.
So, Sulabh, the other day when you were speaking about, you mentioned we were just talking about challenges with respect to returns and hidden costs which founders might be losing because of bad payment gateway solutions. Distribution, I believe, is another factor which is a massive challenge, especially for newish D2C founders. And India being such a big country, it's not easy for anybody to say, okay, today I've started a business. Tomorrow, yes, I can get into distribution. So I remember you briefly touched about, how Airpay can actually help with that as well. So if you can elaborate on that.
So one more thing which I would like to add here in terms of the challenges which the D2C founders face with payments and realize later is the whole support part, right? So a lot of payment gateways would offer you everything under the moon, but later you will realize that if there is a problem, who do I talk to? You can't talk to a bot. You can't talk to an automated emailer, right? We need human service because it's money at stake, right? And at that stage of your business, every penny counts, right? So that is something that founders should think about initially that whoever I'm tying up with, would they be able to provide me prompt human service, right? So these are the things that I would say are not thought of from a payment perspective. Now I'll come to the part where you can have your payment gateway go beyond just payments, right? Which is the most exciting part, honestly, when I talk to anybody, is distribution, right? So you have built a great product or a service. You are distributing it through, let's say, online channel, right? And you know there is a market offline. You want to cater to that market.
Yeah.
India being India, it's such a huge country. If you went about building your own physical sales force, it will cost you millions of dollars. It will cost you zillion of minutes to build it, and it's a risk, right? Versus that, if you got somebody who can take your product live, 2 lakh merchants in literally one day, right? It has no other agenda in terms of no inventory stock, no exorbitant pricing, no listing fee, etc., etc., and is present in every nook and corner of the country. It just works wonders. So very honestly speaking, when I talk to any D2C founder and I talk about the Airpay proposition, this is where they get most excited. And it's very natural, right? Everybody wants to sell, right? And they would want more and more channels, right? So we understand that. And that is what we bring to the table. So come back to your question. As a D2C founder, you should look at payment companies which not only solve your immediate payment problems, but also help increase sales, right? Like we do at Airpay through our distribution. And the last thing I would leave here is the whole afterthought about capital. So I've had friends, I have had colleagues, I've had peers who have not been able to sell because they were not able to produce enough. And why they were not able to produce enough? Because they did not have enough capital during that critical festive time, right? So this is the third thing where I would request all my D2C founders and other startup founders to think more and think as much in advance as possible and go for options where the capital structures are flexible. A D2C company is not meant for a traditional bank kind of a loan. Cash flows are not structured in that sense, right? So it would make sense that they have capital backing, whether it is venture debt, whether it is loans, whether it is venture capital, that all obviously they can decide depending on what they want to do. But they should plan in advance. Yeah.
Very, very interesting things. You talked about distribution and all the other related issues. But do you think that, so is this something that Airpay is actually doing exclusively, or other payment gateways are also playing this similar roles, like offering them same kind of access?
Good question. So I would take a step back. How payment gateways and payment companies have evolved in India, right? So traditionally, there has been this whole offline versus online divide between payment companies, right? So I will not name anybody, but there are very, very large listed players who have been in the offline space since beginning, and they have very limited presence online, right? And then on the other end of the spectrum, there are a lot of players who are doing a very nice job doing very big volumes online, but they do not have presence offline or have relatively small presence offline, right? So where Airpay comes in terms of unique proposition is number one, we are omni-channel. So we have both offline and online. Number two, because of our subsidiary company called Airpay Vyapar, we have a distribution presence, right? Which is unparalleled because everybody else has created their presence considering only payments use case. We have created our distribution considering actually the sales, offline sales for any product from that perspective, right? Of course, there are some products of Airpay Vyapar that we sell already. But on the top of that, as I took examples in past also during our meet in Chandigarh, as you mentioned, right? There are brands who have leveraged our field presence to build distribution for themselves. And that's completely unique to us.
Very interesting. So, Saurabh, in one of your LinkedIn posts I was reading, you've talked about to checkout killers, slow pages, too many steps, broken shipping integration, limited payment options. I feel like if a founder is looking at this list today, what do you think amongst them needs like the most instant attention? What is it that can cause the biggest challenge, or what should they solve first?
It's difficult to pick one out of these because they are in that sense all correlated, right? So if you have too many steps in your checkout journey, it becomes a little difficult. But to be honest, a lot of D2C founders use third parties like Shopify, Wix, etc. Right? So that part gets taken care of to certain extent, not completely, but certain extent. I would honestly say the lack of access to your customers' data is the biggest problem because you would want to know that after doing all the heavy lifting of bringing the customer to your payment page and the customer not buying, right, is a big pain. So that I think is a big problem that they should pay attention to from day one because that's the feedback that will help you improve and make sure that you don't lose future customers. And thus your marketing ROI and everything else that you are doing revolves around that. So that
Yeah.
in my head would be the most important thing.
Funny you should mention that because that's the number one thing that, most of my customers actually don't have any idea about. Like, and I'm surprised some of them are Shark Tank funded founders, all Shark funded founders, and they still have like almost no idea as to who's your ideal, who's their ideal buying customer. And many of them, I think, also there are two reasons in my experience. One is that, it's like they just worked up till now because of I call it like bought attention. So the money's being burnt on ads, they're buying the attention, and that's how they're making the sale. So initially, I think it's fine because 0 to 1, everybody's just interested in like if my business is going to work or not. So I think that journey is super interesting, and they're just not thinking as to who's really buying because they think we'll think about that later. Second reason, in my experience, is that many of them are saying that 75% of their sales is actually coming from other platforms, and the platforms do not necessarily share that level of data. Is there something that Airpay can help with, or like what are your thoughts about that?
So, Kanika, I absolutely agree with what you said, right? Initially, it's just about getting on your feet and it's starting to at least walk, if not run, right? Honestly, it comes down to a choice. You can keep being dependent on these third party platforms and have a good top line, but no clue about your bottom line, no clue about how you're going to scale the business, how it will vary. Or you could say that, okay, I will grind this out, maybe go a little slower, but I'll own my customer, right? So I
Mm,
will check out experience on my website. Yes, I'll have to bring people to my website. That's the dollar spend I'll have to do. But
mm,
once they come, I will make sure that they get the best experience and the best pricing, right? So
mm,
it's a constant struggle. None of
right.
them are like black and white answers. So you
Mm,
have to choose the right mix because,
mm,
as you rightly said, these platforms will not share the data with you, right? And
mm,
it's not only about the quality of your product, it's also about how much marketing dollars you're spending on these platforms, right? So if you open any of these, let's say quick commerce, their P&L statements, right? The biggest
mm,
component is not the sales commission. The biggest component is definitely not the fee that they're getting from the customer, delivery fee. The biggest component is the marketing spends that they are getting, right?
yeah.
Even on the food aggregation platforms, the same story, right? So you might be producing the best vada pav in the country, but if you are
Mm,
not sure it's the top 5 options, your chances of
mm,
getting discovered are nothing. It's a very
mm,
conscious choice. It's a difficult choice, but it is something that I believe people are realizing now and moving towards it. So rather than just the high octane environment of how much have I sold versus that,
mm.
now people are getting more sense. Who did I sell to? Why did that person choose to buy? And why did another person did not choose to buy?
Yeah, absolutely right. And I think you touched upon something very relevant that at some point, you need to lower your dependency on a marketplace and have customers come and buy from you. Obviously, then I think that's a real win. So you retain the customer, you know exactly who's buying, and you can actually double down on the reasons why they are buying as to why they're coming back to you. Otherwise, you have no idea.
Right.
We briefly talked about, high return numbers. Sometimes people blame it on customer intent, or the audience is wrong. And you mentioned there are some blacklisted pin codes, so like errors which are actually infamous for that. Do you think that checkout and payments could also, that's also a role that plays here? Like if it's not the right solution, that is the problem that is increasing that?
So you,
Not necessarily through a gateway. I mean, in general, do you think that the checkout and payments problem is also an issue which is adding to it?
no, definitely. So every drop counts, right? So Imagine you were able to optimize who to show COD option, cash on delivery option, and who not to show, right? And imagine your payment gateway helping with that, right? So we all know that returns are significantly higher in cash on delivery cases versus the prepaid cases, right? So imagine if your payment gateway could show you that, okay, let's say Sulabh is a customer who frequently returns products on our platform with other merchants, right? Don't show him COD option versus Kanika is a customer who doesn't have a very high return ratio to her a COD option. Or Sulabh stays in a pin code. He has chosen the address which is in a pin code which is known for returns or which is known for theft, which is known for um, poor deliveries, right? Versus Kanika who stays in that kind of location. So it's okay, show this option there, right? So what is this whole COD optimization which helps in returns? The other thing is how lucrative can you make your prepaid offers, right? So can you on the fly decide that, okay, Sulabh has a cart size of, let's say, above 10,000, right? He's buying my products, which are nice, high margin products for me. Let me offer him an additional discount of 5% or 2%, whatever, if he chooses a prepaid option, right? What if you had that kind of intelligence built into your payments experience? Right? If you can do these things, can before dispatching the product, lower your returns. Another aspect of this is the whole shipping integration, right? So if your shipping is pre-integrated during your payment journey and the customer can choose whether they want an express checkout, express delivery, or whether they want a normal delivery, right? And whatever is, let's say, the cost of express delivery can get added during the payment itself. So now you have a high intent customer who's making a prepaid purchase, who wants his product like today, right? And is willing to pay extra for that. The chances of your returns are obviously much lower, right? So this is the kind of intelligence which, let's say, at least Airpay brings to the table for our merchants, and thus overall RTOs can reduce 30%.
If I have to ask, as a CBO of Airpay, what is a bigger competition to you? Other payment solutions or COD?
I wish I could say other payment solution, though it's still cash. To be very honest, it's still cash. Of course, it depends on category to category. But whenever I speak to D2C founders, I get a number of around 60 to 70% of COD still. And obviously COD, when it goes through a non-PG route in that sense. So yeah, the biggest competition in India still remains cash. We are getting better. We are, for especially the larger ticket items in the larger cities, we are getting better in terms of more prepaid share. But when you go to, let's say, tier 1, tier 2 cities and small AOV products, COD is still quite dominant.
And how long? Like it takes weeks, I believe, for the settlements to happen from logistic partners to the brands.
If you're lucky. No, yeah, it takes a lot of time, right? Which is where these solutions are coming up. A lot of payment providers are trying to optimize this space. But again, because we at Airpay have a physical distribution, right? We are already solving this COD problem. So how, right? So let's say you want a customer who's based in Agartala, right? You want to go for a COD option, but I am the merchant and I would ideally want to provide you a prepaid option, right? So now the twains can meet in between. What happens with Airpay is you go to Airpay PG and choose COD as an option, right? When you choose COD as an option, Airpay shows you which are the retailers which are there in your pin code close to your home, whom you can choose and make a cash payment there, right? So what happens is these are Airpay Vyaparis where you go and make a cash payment, right? You as a customer have paid cash. This Airpay Vyapari has a digital balance with Airpay already. So let's say you bought something which is for 500 bucks, right? You chose COD, you chose your address. We showed you these are the 5 retailers who are in your vicinity. You went to one of them, just gave your mobile phone number and submitted 500 rupees to him, right? His Airpay balance, this 500 rupees then are transferred to the merchant digitally. So customer gets COD, merchants get prepaid. Best of both worlds.
You said that it's lucky if somebody gets settlement in weeks. If when that cycle, say, compresses significantly, what actually changes in how a brand operates day to day? And, why does it matter more than what most founders realize?
It is oxygen, right? It is like oxygen for us. We can't survive without it, right? It is same way capital for any startup, right? The amount of time your money is stuck in the supply chain or in the logistics, right? It's not available to you. It's no good to you, right?
Yeah.
We, if we release it in, let's say, one day versus, let's say, whatever, T plus 70 plus 10 that it takes typically, it means that you have 9 to 10 additional days of same capital being available to you versus being stuck. So it could be a matter of life and death also for that
Yeah.
business.
Yeah. And while we're at it, of course, the faster D2C brand will grow, the more financially stretched it will become because of exactly the same reason that we talked about. Why do you think that traditional lending sort of fails to solve this problem, and why they need to figure out other solutions? One of them being like, of course, better payment solutions as a means to solve it.
So traditional lending is not thought of from a D2C environment perspective, right? It's very heavy towards large organizations who have structured flows, who have large merchants where, let's say, they want capital, they can do something like factoring, right? Bill discounting, etc. The unevenness of the business is not accounted for. Bank will decide a date, you have to go and make the payment. Whether your shipment got delayed, whether your merchant didn't pay, whether your customers did some returns, etc., doesn't matter to the bank, right? So there is no flexibility, which is where the new age capital options come in, like Airpay Capital, where we tailor make the repayment schedule to your business, right? And we understand when things don't work out for your business for temporarily and you want some assistance, right? Or there are some, let's say, festive periods coming up where you need additional capital. So, in a nutshell, if I have to answer, traditional lending systems are inflexible. People who are coming in now with flexible solutions are thus giving what D2C brands actually need.
Can you give us a real example, brand that is actually using embedded finance to grow?
So I can't again take the names, but there are the largest. Okay, when you say embedded finance, just elaborate on what you mean exactly so that we are on the same page.
Solutions. So they so basically creating leverages from the existing chain, the examples that we just talked about, rather than using debt or investor money or any traditional instrument.
I'm still not clear about your question. So
The example that we just used. So you gave me an example of how offline payment could quickly translate into digital payment for a merchant, but for the customer, it still remains COD. That's
hmm,
a very simplistic way of shortening the cycle. And you mentioned that 60 to 70% today is still COD for most of the brands. So one way is that how would they solve it in terms of operating capital? Either they'll have to use investor money or they have to use debt, traditional lending. So my question here is, so I'm comparing these vis-a-vis the new age. I'm calling that as embedded finance.
understood. Understood. Uh, give me a minute to think about the right example which I can quote here. Okay. So again, it's one of our clients, one of the largest consumer durable companies in the country, and one of the oldest also, right? And they've been doing business with us for 6, 7 years, right? Now they were collecting payments from their distributors through the traditional banking channels, right? And it used to take them anywhere between, I would say, 48 hours to 72 hours at least to get the money, right? And this is a very stable supply chain, right? What we brought to them was a solution wherein they started getting their money on the next morning itself, right? So while the compression from a 72-hour to a 24-hour window may not seem much, but when you operate at that scale, the translation was into multiple crores, the saving, right? Because now the capital becomes available to you 2 days in advance, right? So it's the same payment. They are not charging anything extra to their suppliers or to their distributors, but they are just getting their money faster through us, right?
Mm.
Another example could be international payments. And by the way, this is one topic we have not spoken about too much, though it impacts a lot of D2C founders, especially who are exporting goods, right?
Yeah.
So with the whole cross-border license thing coming up now, and Airpay has been fortunate to receive a cross-border license also, both for inwards and outwards, right? The whole cycle is truncating, right? So in your traditional SWIFT system, it used to take, let's say, 7 to 8 days at least to get hold of your money. Now, with this kind of setup, it should not be more than T plus 2. So something which used to take 7 to 8 days is now coming down to D+2. Right. Another example of this could be the whole settlement cycles. Right? So a lot of payment gateways still offer a settlement cycle of T+2, T+3, T+7 also. Or they break it instrument wise that, okay, domestic payment T+1, but international payment T+7, right?
Oh.
So that means for your international customers, even if they pay through credit card, your money is stuck for 7 days, right? That means you have to pump in your own money for these 7 days, right? With somebody like an Airpay coming in, it is T+1 across instruments, which means that you
Yeah.
get access to your money the next day itself.
Very interesting. Yeah, you're right. Actually, we should have talked about international as well, which not all merchants, not all payment gateways actually offer, and because of which they end up tying up with multiple payment gateways. Something you'd like to talk about in terms of, how Airpay is different?
Yeah, I think the most important thing, honestly, that we are solving for is this whole operational complexity that you spoke about, right? So if I talk to somebody who is, let's say, in the second to third year of their operations, right? This is typically what I find. Okay, do you have payment partners? Yes, we have many payment partners. Okay. Who's your payment partner for offline payments? Player one. Okay. Who's your partner for online payments? Player two. Okay. Who's your partner for international payments? Player three. Okay, great. And by the way, whose QR do you use? Player 4, right? So now imagine being somebody who's handling all of this, 4 players, 4 different commercials, 4 different settlement ads, 4 different people to talk to, and so on and so forth, right? Versus that, what Airpay brings is the simplicity that you have one person to talk to. Whether it is online, offline, QR, international, cross-border, whatever, everything under the sun is available with one person. So that means you have one person to chase, one commercial to manage, one reconciliation to do, which means your finance team is free to focus on things other than just reconciling that bloody where is my money.
Yeah. Actually, I was gonna ask you that next. That I see so many brands, especially when they reach a certain scale, they're juggling multiple payment and finance partners. So I was gonna ask you that what is the actual cost of this fragmentation? And why are there so many brands up there? Like, I don't know.
No, it's because the market is fragmented, right? The market is, as I said, traditionally payment gateways have evolved as either online or offline, right? We are one of the few payment gateways who has been omni-channel from day one, right? So the cost of this is number one, wasted effort, right? Because you are doing multiple reconciliations. You are spending hours and days on this. Second, bigger thing is the whole opportunity cost, right? And I'm not sure if you were going to ask it as the next question, but a lot of times I hear from the founders that it's okay to have 2 PGs, it's okay to have 3 PGs. What if you are down? What if the first PG is down? What will I do? Right? Now, the reality is very different. We are payment aggregators. That means behind us, there are multiple banks, PGs, right? So you actually don't need another payment aggregator because the payment aggregator itself is bringing multiple PGs to you. So if bank 1 is down, automatically transactions route to bank 2. Bank 2 is down, they go to bank 3 and so on and so forth. This is the job of the payment aggregator, right? So you don't need multiple PGs as backup, right? But again, that's the level of awareness that is there in the market, which we are trying to kind of cater to and make them more educated.
What role does MDR play here? The MDR rate.
Unfortunately, a lot of conversations start at MDR because that's the only thing which people are aware about, right? It's like I go and want to buy, let's say, a suit for myself, right? A nice jacket, let's say, right? And the only thing I tell the shopkeeper is give me the cheapest jacket. Ask why do you want the jacket? You may need it for a sub 10 minus 10 degree temperature in Spiti versus wearing it in, let's say, 10 degrees in Delhi or wearing it in 20 degrees in Bombay. The answer would be very different. But your question is, which is the cheapest jacket? So you will get the cheapest jacket and you will go to Spiti and you know what will happen, right? So similarly, MDR plays a very important role. No denying that because that's the most easily observable parameter, right?
Yeah.
How much are you going to cost me? So it goes back to what I was saying earlier, cost versus value, price versus value, right? So which is where we are trying to educate the market that look at the value, don't look at the price. A lot of times this also gets misplayed, right? So a lot of players have marketing gimmicks around this, right? So they will give you a crazy price, which you will say, oh, wow, this is the cheapest in the market. But then they will silently put a caveat, right? That this is available only for first, let's say, 2 lakh rupees, which is nothing, right?
Yeah, it
So
just
you
go
will
like
end up,
this.
yeah, it
Yeah.
goes like this. 2 lakhs of sales is nothing, right?
Mm.
So you will end up being stuck with them because of that initial 2 lakh rupees. The actual value delivered to you is next to zero, right? So MDR is important, but there are things more important than MDR which should be understood by the brands before tying up just the government.
So you think MDR is also a reason why people have multiple payment gateway options? Just to have like, have a diversified spread. So they do think about value, but they think, okay, fine, I'll see whatever works.
No, so this is again a very interesting question because it depends on your scale, right? So when
Mm.
your business is relatively young, right?
Mhm.
Actually, you don't need multiple PGs. One PG is enough because success rate should take care of itself. It's a good PG. From a pricing perspective, if you want to play between PGs, you need to have an orchestration ability. Orchestration is basically you managing which volume goes to who, right? Which is, I would not say it's a very, very difficult task, but it is something which you will only need to do when you've reached a certain stage, right?
Mm.
Because there is a cost behind it, right? If you do it on
Yeah.
your own, you'll have to set up the team, you'll have to have the intelligence, you'll have to set up the systems, manage the systems on a day-to-day basis, and then keep monitoring the data that whether what routing you are doing is actually yielding the results that you wanted. Or you could tie up with third parties which will charge you a bomb, right? So
Mm.
till you are, I would say, a D2C or a startup or a mid-scale company, it doesn't make sense to invest into orchestration. Once you reach
Mhm.
beyond that, probably you can evaluate those options as well.
Let me just switch gears here a little bit.
Sure.
We talked so much about payment. You enable international payments also through Airpay. Looking at if you had to today recommend a D2C brand who's looking to, start serving Indian diaspora abroad, let's say, would you ask them to look at, say, UAE or North America or down south recommendation?
In terms of where they can find profitable clients,
Yes, yes.
we are living in very interesting times, Kanika. This West Asia war, right? Is changing the dynamics like crazy. So just this morning, I was listening to a podcast, and as per them, 85% of the henna mehendi exports in India are kind of stuck because their primary customers were in the Middle East, right? And because of this war, the shipments are stuck, the orders are getting delayed, and so on and so forth, right? So
Mm.
it's a tough time, right? Coming back to your question, I think it depends on the product or the service that you have and where do you
Mm.
find fitment, right? So mostly the obvious answer used to be that US. Go for US because that's the biggest market, highest spending power,
Mm.
etc. But of
Mm.
late, we are seeing that Indian businesses are becoming much more sharper in terms of where to grow their business. So I'm not
Mm.
an expert on other businesses, but I can tell you about Airpay. Airpay has grown its business outside India first in Africa, right?
Mm.
So we are the first in the world payment gateway to get a license in Tanzania, right? So yeah, and we are growing in other countries in Africa because that's where we sense the opportunity is the biggest for player like us, right? So I would say there is no one straight answer. It depends on your business. It depends on whether you're catering to just the Indian diaspora or you think that the wider audience outside has appeal for your product, right? So that's how I'll leave it. But yeah, if you want to collect payments in India, anywhere you go, we're there.
So we know the answer. Beside, minus the war situation, go to Sulabh. He will help you sell anywhere in the world, including Tanzania.
Yes. Yes, for
Okay,
sure.
so switching format to a little bit of a rapid fire mode. Okay, just a couple of questions. What is the biggest payment myth that D2C founders still believe that is quietly costing them money?
Payment is a cost. It is not a value. That's the biggest myth.
One metric that every D2C brand should be tracking in their payments dashboard, but almost nobody looks at.
Reasons for failure. Because
Reasons of.
unless you understand that, you are not fixing the problem, right?
Hmm.
So a lot of D2C founders come to us and say, hey, my failure rate is high. And when we look at it, we figure out that international payments are failing. And then we ask them, did you get international enabled? there are international customers who are trying to buy my product. I didn't know this. And then they ask us and we enable, right? This is a very simplified example. This could be anything, right? Let's say EMI options, right? People are looking for EMI options, but they are not getting on your brand, and thus they are leaving the journey, right? So I think
Hmm.
the reasons for failure, looking at them and optimizing them with your payment partner, is one of the most important matrices.
Interesting. Cool. So this is very interesting. We just had a very interesting conversation, and as we coming towards the close, obviously I have a question still. So 3 years from now, what will separate brands that scaled profitably from the ones that struggled, and what will be the Indian D2C payment landscape looking like by then?
In my humble opinion, I think the brands which own their customers' data would win. The brands that spend money and build their own sales interfaces versus being dependent on third parties would succeed, because it's my strong belief that these third parties will launch their own private labels and then kind of wipe out a lot of players, right? That's my strong belief. In terms of payments, I think checkout optimization is the way to go. So knowing who to offer COD, having pre-integrated shipping options, having multiple payment options, and just a fast experience through pre-filled addresses, saved cards, etc., so that the payment experience becomes smooth and almost effortless. That is where I see us kind of growing.
That's amazing. That's a very clear answer.
Thank
And
you.
when you said people brands should own their data, that's music to my ears because that's the one thing I can't stop harping about, and still I feel like brands still are not hearing enough of that.
They will.
This is this has been a great conversation, Sulabh. Actually, I also learned a lot of things about payment options, payment gateways. What role can a payment gateway play? And frankly, up until now, if I think I started a D2C brand, even I would have looked at MDR and taken a call, because that's, I think you tend to think that it is just a simple function, so it doesn't matter who's actually doing it. But no, it goes way beyond that. So thank you so much for sharing your insights. Thank you everyone for listening in. I'm going to leave Sulabh's LinkedIn profile also in the description box below. You already know he's the CBO of Airpay, extremely busy person. But if you want to reach out, you please do. And any more questions around this topic, or what would you like to see more of, please do let us know in the comments. Thank you so much for tuning in.
Thank you, Kanika, for having me. Lovely being here and great conversation. Thank you so much.